Crypto Sniper, back in the house. Thank you for your support. Amazing support. Can you believe it? 30,000 subscribers. All of them real awake crypto traders that want to build wealth and understand technical analysis can give you an edge. Not just the gossip channels and all the clickbait stuff. Real followers that want quality, macro technical, micro technical, mini technical are on this channel, and that is a special, unique quality of person that aren't all about the story and the whatever and let's go moon and all the cheery feel good stuff, but we'll hear the good, the bad, and the ugly. That is you. You are one of those 30,000s, and I want to say thank you. Massive success. Cheers. Thank you very much. And you've taken us through the 30,000 number, and we truly appreciate it. And we want to find only the other top quality other people that are focusing on the core technicals in crypto analysis and are ready to take on the double in capital gains tax for one. By the way, you should be protecting your wealth, building your wealth during reset times. We're going to talk to you about Bitcoin today, and we're also going to talk to you why I feel it will be giving an opportunity in the alt market as well, and what's happened. And also, given that we're on YouTube, but we don't stream every day. We do a full-on stream. We use some kit. We use real audio. We want to be super crisp. We do Wacom. It's very difficult to do updates, especially if I'm just on my own without my backup support team. So I want to also take you from where we were from the last YouTube, because we want to follow on from that. A few things happened on that very point. If you are a subscriber to this channel and you liked what you heard on the crypto stream, if you want to make sure you get my latest thought, you should be following at the Crypto Sniper on Twitter. At the Crypto Sniper on Twitter. Because we updated about how our direction and view changed slightly and morphed with the times. And we had a real inverted HVF setup, which I'll be running through with you today when we go to the charts, but not yet. So remember that. Follow on the Crypto Sniper for the updates. Because last time actually we're saying there was going to be a potential recovery. Remember that? Yes. So we've got to own that. We said we was going to recover up. And it did start. It did start a little bit. But then it started to set up structure we didn't like. Didn't have opportunity to YouTube for you. So you need to follow at the Crypto Sniper for the smaller updates. Thank you again for the 30,000 mark. That's pretty much it. Watch out in the comments below, though, for mimicry. The only way to engage with us is through our website. Go to themarketsniper.com. Also, through 43,000 on the Market Sniper. We've got a great copper trade we'll be updating, guys, on later, and metals later on in the week. So you're welcome to subscribe there as well. The Market Sniper. Traditional markets, gold, silver, and also currencies, which has an effect what the dollar will do, because Bitcoin at the end of the day is an anti-fiat. Yes, that's right. So don't forget to do that. But what happened with Bitcoin? And let's talk about Bitcoin and get up to the nitty gritty. So from our last tube, there was a scope for some recovery after the plunge. That was the plunge that took 50,000. You got some recovery, but then it started to flatline over, roll over, and set up some structure. So I've highlighted it in blue for you. So there was the spiller, a thriller all the way from Manila, and it's on this one particularly, I'm on the perpetual on FTX. We're using FTX. There is a link below. Go and open an FTX account. You get amazing P&L breakdowns. By the way, you guys need to be doing your own P&L post-mortems. And the best time to do it is after a sell-off in Bitcoin, when you've had a run and a sell-off. Not at the all-time highs, when you feel like a legend and everyone's long and you're a boss. No, you got to do it after one full cycle of an up and a pullback down, and see which tokens. It even breaks it down on which tokens you gave up money, which ones you made money on. You got to do P&L analysis. It's really advanced. We'll be talking more about that in our premium area, by the way. I'm going to take my guys through a bit of a deeper dive on that. And for that, you need to go to themarketsniper.com, link below, book a call. Go find the link that says click here to book a call. Click on that link, you'll get a diary. By the way, some guys don't. They say, oh, I'm not sure I'm ready. I'm not sure I'm ready to go. I'm afraid that if I do it, I might want to go. I'm almost holding myself back. And then, I'm not ready. I'm not ready. I'm not sure I got the time, or not sure I got enough money to make it count, or I'm not sure there's always something. I'm not sure my wife approves. I'm not sure the dog approves. I'm not sure the transgender community approves, etc., etc. And don't panic. Because the sooner you start is the sooner you stop giving up your gains. Because it's not only about what you make, but it's all those losses, especially when we've had sell-offs like this. It's really, really useful to not be overweight late in the bull alt trend when Bitcoin's about to crap the bed, and give back all that you made in the upside and some, and actually be worse off. There's nothing worse than being worse off and having a lower Bitcoin value. You can stop that from happening, and you will have the time, and you can set the amount of time commitments you set aside for your trading. And the method is a set and forget trading strategy. That means if you have to go out, you can have stop, take profit, and your entry point, whether you're in the market yet or you're still awaiting to be taking in the market. Those are all the reasons why you can have the time. You're spending time watching YouTube. You're watching me. You're part of my new 30,000. You've got the time, okay? All right, let's get on to Bitcoin. So big sell-off, spiller, 50K, and then it started to roll over like this, sitting on, you guessed it, that key round number, 54,000. How many times we given you that? By the way, on the 54,000 mark, in a legacy YouTube, as we ran our target for the first cup gold nugget HVF, that was around $27,000. We said, how far can she go? We gave you two big numbers. We said 36,000 and 54,000. That was when we were at 27,000. It feels like a long time ago, but actually it was end of last year coming into this year. Believe it or not. It's just yesterday, but here we go. We're heading on for May almost. So maybe it is 4 months is 4 months, but Bitcoin's done a lot in that time. So we gave you 36 and 54,000, and I'll show you why those were key, and I'll show you which ones beyond that will be key again in the future for Bitcoin. In other words, I'm going to give you your next 36 and 54,000, and I'll show you why 36 was such a big number and why 54 was such a big number. And here you are on a smaller time frame. I'm taking you right down to a 15 minutes, and normally, you know me, I start on the big views. I'm going to go out to the big views this time. We inverted a little bit today. So this is a 15-minute just to show you recent history, which is still fresh in your brain. Some of you might be hurt. It might be, it was painful. I'm down. I'm way off my P&L all-time high. Don't worry. Don't worry. Everybody, including me, is. Why? Because I got my collateral in crypto too. I'm not sitting with fiat as collateral. I've got part of it, and I don't sell it every time there's going to be a little bit of a sell-off. But you could have taken your all your leverage trading, you could have closed it all and banked all that profit. And you could have not eaten too much loss apart from that little bit of collateral shrinking, which will reinflate. And we told you which tokens which are good to have for the reinflation. We said Ethereum will overperform a little bit Bitcoin on the reinflation. So you should have got that too. But anyway, let's go back to this. There's that 54. We told you on a previous YouTube, 36 and 54 when we were in the 20s as we were running that target, and it's still proving a key level. This sat on the 54, set up an inverted, did a lovely little flaggy thingy there. I traded it perfectly, imperfectly. I made my usual fair share of mistakes. It's occasionally you execute like a legend, even on your own method, but most times you don't. And the reason I tell you that is to say, A, I'm not a guru, B, I'm very far from perfect, and C, mainly for you, because you'll be sitting there and you haven't executed perfectly, and you think all these other guys on YouTube are all just geniuses and executing perfectly all the time. And I'm here to tell you they aren't. I'm not, and the others that say they are lying, okay? It's okay. You've got to learn to forgive yourself, love yourself, not beat up on yourself, because we all think as traders that we're super motivated, we're super awesome, and that we must now beat up on ourselves, and all you do is ruin your confidence. You do a lot of negative self-talk. It's very hard to execute perfectly every time. I'll tell you one of the mistakes I made. I was short this guy. I said it's going down. I had collateral in BTC and Ethereum, so I was happy to be short. I generally don't like to short in a macro bull, but this was a good structure, and I wanted to hedge some of the shrinkage in the collateral. What did I do? I got short early, and I was shorting. Yay, here we go, short, short, short. And then it did this pullback, and then I lost my nerve a little bit. Can you believe I lost my nerve in my own method? Hadn't even done the stop. And I thought, I don't know. I looked at the inverted chart and it scared me. When do you look at the inverted chart and not get a little bit scared? Let's show you the inverted chart, how it was looking at the same time. Here it was. I'm talking about this event over here. Let's put it on the same time frame. 15 minutes. Let's follow the flight path. You might, many guys say, oh, well, what have you told us new? You've revisited everything that goes on. This is important. You go where you've been to understand where you're going to. If you don't ever understood where you've been, you're never going to understand where you're likely to go to. And the lessons you learn on your recent trip from where you've been are really useful in terms of what you're going to do on the places you're going to. So that's why we do a revisit. That's why we do a post-mortem. I saw this. This was at this time. I kind of saw this very scraggy, kind of volatile price behavior like that. And I thought, dang, this thing's coming back. And I was in part right. And it did start to come back there in that candle. So I closed part of my short. I ended up going back in it later. And whilst it was a profitable trade, it was much less than it could have been. And I say profitable because it was a hedge. I was having other things that were going down. I ended up chasing back in on the break of the flag when I realized I shouldn't have done it. I just had emotional weakness. Emotional weakness, a sense of emotional weakness. I don't like shorting Bitcoin in a macro bull. I'll be frank. I don't want to really do it. But I didn't stick to the trade. Pull back, kissed our axis at that time was making me a little bit nervous. In the end, I ended up chasing back and I only probably got properly in short there. And it made targets. By the way, that was a 47 target on FTX. That's a derived market. It gave targets of 49K on Finex. It gave targets of 48K on Binance. All of those were met perfectly. All of those were then met. And that turned out a great little snatch and grab trade. But what did it tell us? I'll tell you what it told me. I'll tell you what it told me indeed. It told me that, support guys, just check the stream is still up. Okay, mine's gone and crashed down. Okay, might be my YouTube. I thought you're gone. I was looking at you. By the way, I will be watching the comments. Don't forget to throw them out. Top 5 get a response. And remember, people mimic us. Only engage with us through through our website. Any WhatsApp numbers is a scammer, spammer. They'll ask you to send Bitcoin to a very shaky, thrown together exchange and they will steal it. Okay, so what happens is this was a good move in the end, but it didn't overperform immensely. You'll see here on the FTX, just run. On the others, there was a little bit more of a run through, and that was fine on Finex, Stamp, all the others. And then we started to go into another little bit of a price behavior and what was happening here. So let's go back. Let's go to the more recent history. So then we started to get this hanging out, which was, wait for it, in and around the 50K and the 50,200. So we got a little bit of a neckline on the 5,200, but this was all about the 50K. Key levels of significance, the round number. You had now fallen below, and this is a good thing. We needed a new low. We needed a low lower than previous lows because we'd been making rounded tops. Remember my story about the bending banana and then the rising wedge at the end, and how the highs were getting marginally higher. We needed a low, and the lows were getting marginally higher as well. We needed a breakthrough, relieve the pressure. I call it the cramp in the stomach that needs a fart in the pants. It needed to just relieve the pressure. It was getting uncomfortable down there. So it had a little bit of a bloodletting of all those irresponsibly leveraged, and it broke on down. So you ran a marginally lower low, and then you're going to have lesser of a rally and a lower high. So that's all good because it will set up a potential consolidation. We'll get to that when we go up to the bigger time frames. Just want to cover the recent history. So then we got possibly what could have been an upside break. I didn't want to believe that this was going to go much lower. We didn't have much overperformance, and the momentum was not overwhelming. So it was showing me, yes, it's going to sell off. Yes, it'll make target, but there's not much left else left in the can. And it did a final little spiller with a ghost of a low, kissed on the FTX to 47K. And then we've had a snapback rally, which has largely seen this be a move to the upside. And for me, this is point in place, 47K on the FTX, a relative low point where we could have a period now of some recovery. And I think we could go quite a bit in terms of recovery. Let's cover it. But there's going to be stops and pauses along the way. This is not a snapback, wicked, high confidence moon return move. This is going to be walking its way out. It's going to walk its way out if we are right. And there's going to be key levels where it's going to find some trouble, and we could even be coming up to one soon. So let's start going up the time frames. We started low. Let's walk it out to the higher time frames. Want to show you these key levels that are in existence here. So you know we have a big number called 55s, the 3 5s and the 2 O's. The SSS, it's kind of like so. You know, when your dad, you borrowed your dad's car and you came home late and the tank was empty and maybe you scraped it on the rims on the curb and he goes, so it's that level. A little bit of a quizzical level, 5,500, and it's smack in the middle of our funnel here. This is going to be an interesting level right here, starting at about 54, going to 56, with your midpoint on that key level that's shown itself to be totally relevant a number of times. So you can see snapback rally, strength, 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 up to and makes the head and shoulder inverted here, which is also kind of a W bottom as well, where the target is the base. You can almost to a degree say that is in play. I'll draw that one for you separately actually. That would be a slightly higher neckline, and that's going to run you up somewhere into our funnel. That's going to be a worthy draw. So you'll then run into some resistance here, and you'll probably have a little bit of coming off after you do that. So the funnel is a muddy field. You're pulling the wagon and the cannon and you're at war and you're dragging it and you're gone from the tarmac into a bit of a muddy field. Things slow down, you stop, you need more P brakes, you're exhausted, you have more meals, etc. It's tough going. That's what it's like for price behavior too. It's coming up for a bit of a muddy field. So this zone will be a slowing point and some pullback. So that's not bad. That's not bad. It'll give you opportunity for the main theme of what we're pitching to you, why it happened with cryptos. The recovery of Bitcoin will let some of the selected alts go. That's where we're taking you. Some of the selected alts will be able to go. I think Ethereum as a major is one of those that is showing a tendency to overperform. Let's keep walking you back up to the bigger time frames. Let's take you into the bigger time frames. I'll put some of that, take the eye off, not to have too much clutter, and we'll take you to the daily. It's very, very important to understand the macro God market. That's maybe too much. I'll go 12 hours. There you go. This is really good. So you might remember, I'm going to take you back to the 36 and the 54K number now that we're having this discussion and we're talking about Bitcoin after this big long move. You will remember the bent banana theory. Yep, you heard it here first from yours truly. Let's just get a Cokie out. Let's draw nice and thick. Those tops coming over and rolling over, marginally higher highs. And then the lows, very similarly. That's why this is good. That has run that, and that has too. That's good. It's released some of that leverage, that accumulating leverage. Not everyone was stupid leverage. Some of it's a moderate leverage, and they were adding, and they all got a little bit washed out with that plunge and plummet. So that was what's needed, and we needed to clear the air. It's kind of like a fire. That, you know, after the fire, the grass grows greener. You needed that quick fire through the bushveld to rinse out some of the dead wood. And some of you could have been that dead wood. You want to avoid being that dead wood. That's why you click the link below where it says, book a call, and you have a chat. It costs you nothing, it takes 5 minutes. And you may make the decision to not get washed out next time and be in a community where that was being warned. And be more focused on your money management and be more specific in your trades and have specific setups with pre-programmed stops, take profits, and entry levels. How about that? That allows you to go and surf and not feel bad. Okay, so what happened with that 54 and 36? Let's discuss that. So we have to go out to the even bigger macro in the end, if I'm going to bring that one in, because we're going to take you to the key points that exist in technical trading. This is one of the next chapters I'll be releasing to my premium guys on the really advanced segments. And this talks about understanding your transitions and where you are in the life cycle of a move. You'll know from me that it's our express opinion that we are in a 2.5 year continuation pattern that is set up from December 17 highs when Bitcoin fell apart all the way through till July, roughly, when we properly got on our bus. Here was our, let's see, RH3, and there was our RL3. That was for our macro HVF structure. In other words, we were saying for 2.5 years on the big time frame, that's almost weekly, double daily at minimum to 2 or 3 days per candle, that you have been in a continuation. You transitioned from a continuation into a bull market break. So all those up legs, including when we called shorts, yes, at the RH2, around about the 10K level, after all those shooting stars, and said it's not going at an all-time high. That was August 2019. All of that price behavior that saw you come back down, and eventually the COVID spill last year in March, the final collapse that occurs in one direction before going the other. This is known as a capitulation, the look one way, go the other candle. That was an entire, if you had a 3-monthly chart, the COVID was in one entire 3-month candle, look one way, smash the other. That's right. That's how the market shakes you up. Just like when I was showing you the 15 minutes and I was saying this could have been an upside and at first did a spill before you got that snap pump. That's typical of ending structures. It's a monster to trade because it'll run your stop if you're being long, and if you go short and you reverse, you'll go short and you'll be snapped out on the major pump. You're wrong whatever you do sometimes on those events, but when you recognize that, you know it, you're at a key turning point. A key turning point of some significance. So you're learning things here. We're teaching and you're learning. And I'm learning from you. Thank you. So let's put that fib on. So that was, I want to do it the other way around. Let's get it right. So what we do is we project from when the key transition occurred, from that low point. It's going to be hairy. Let me do this, pull it through, get a bit more opportunity to be precise. Now, that fib that you see there, the internet hamster to continue running and give us some power because we're waiting for our charts to come back. Nothing like doing a technical presentation, by the way. Can I ask you all, while we're waiting, hit the like button, one social media share through your Facebook, through your Twitter profile, through your Tumblr, whatever you're on, ramble on, you name it, you do it. There we go. We're back in business. Thanks to you guys liking and sharing. We really appreciate that. If you like and share, the internet hamster runs a lot harder, and then we can get our charts back up. So it's totally cool that. All right, so back to the Bitcoin chart. Let's see if we can get him up now. There he comes, there he comes. In fact, I've already overlaid that fib now. So what have I got for you here? I've put this 100% fib on our target. The fat purple line was the original target of Bitcoin. Remember, we expected overperformance. So the original target was made and we expected overperformance. Let's just pull this through. What do we want? We want a daily chart. Let's do it on daily. Been a bit messy today, hasn't it? Forgive us for that. So there we go, 27K. Now the interesting thing is, we told you where the interim levels would be. Who remembers that we said there's going to be an interim level? HVF method does this for you, by the way. No other method tells you, hey, we're on the way to your target, but we're going to have a rest here and we're going to pull back. You know anybody else that does that? That tells you, by the way, you know, you could bank or you can chill out or just go look somewhere else. Don't get emotional. You might get a bit of a challenge. Well, that's exactly what happened when you ran the 19,000. We had run all the way from the 10K to 19,000. That was a doubling of Bitcoin. There it was. And you came to this block of price behavior. Right there. We don't want little boy blue. We want TG pink. There it goes. That was your second interim. Now, why am I showing you that as legacy? Well, it was perfectly dovetailing with the golden mean. That is the 61.8. So by knowing your core pattern structures, when you broke, when was the last low point that you are now commencing a bull market trend to a known target that was geometrically generated by the technicals itself. And when you put the 100 on that target and you put the RL3 at 0, 61.8 was perfectly the interim. And what happened? You got smacked down, not once, not twice, but even a third time slightly in that period, making this particular piece of price behavior that I've encircled in the box. So we'll go and we'll bring that into view now a little bit better. And you can see how that happened. Eventually you went up. Then we made our target. We had our final blow off into the highs. So much work in here. Just ignore, you know, it went up to the highs. Now, where else did we have interesting interactions? Well, we gave you the 36,000 because of the golden mean confluencing that was occurring so far. We said if it's already occurred once, it's probably going to reoccur. Yes, makes sense. So what happened is, at the 1.618, what was your value? 36,752. At your 2.618, what was your value? 54,461. So we said to you on this channel, Legacy YouTubes, why 36 and 54K will be big numbers for you. Because it had already shown good compliance to Fibonacci golden mean structure. What happened? Let's go have a look at the chart. What happened? What happened? It's a bit of a messy one. And I had chosen another one, but the internet wasn't playing so nice with us. Wow, I better just blank that out. Let's just put the 54K here. So busy. 36. 36,000 and 54. That's what happened. You had your biggest pullback of your bull market in a falling wedge on the make of the 36,000. Did it stop exactly on the 36,761? No, it ran actually at its very highest point, 42. Did this stop exactly at 54? No, that is round about 56,000 and some change, if I remember correctly. Get you an exact number if you want. So what you can see is that there should always be a bit of an overrun. That high was 58,354. That high was 42. But you would have closed, if you closed at 36, you would have watched it go to 42. That's quite a bit extra. You would have watched 37 fall, 38, 39, 40, 41, 42. And you would have FOMO'd in at 42. And you would have worn the sell-off all the way back down to 29. That's right, that's 29 grand. The people that sold at 36 could have bought back at 29 and avoided the fluffy move up that got given back and some. The people that sold at 54 would have missed the run up to 58 and bought back, wait for it, 42. Absolute low, 43,021. 43,021. So you can see the Fibonacci confluencing has been very, very significant as well. Where are those next fibs? That's the question you want to ask. after we've recovered, where will we go? And we'll be telling you at the end of this video. But let's get into what's going to come next. Who likes Fibonacci analysis? Anybody in the house? I'm looking at your comments. GGD and Ethereum and 2 1,000-ounce bars with proceeds, says the Cool Breeze. Good. I think he's investing in the right place. So what's happening now? We'll come back to those fib and we'll tell you that once this is over, which will be the next level. So a lot of guys saying the bull market's over. The bull market's over. It's not over. The bull market is not even close to being over in my view. It will run at least to close to the end of this year, November, December, if it ends early by my reckoning, like the other years. My overall opinion is there might be a correction November, December, because so many people expect it to pull back. And in fact, it will go higher. Your biggest mistake will be selling too soon. Listen to these words. I'm going to say it again. Your biggest mistake will be selling too soon. And I will say it a third time. You will err by getting out of this market too early on the basis that you think it's going to be exactly like last time. That's more likely to happen than the bull market is over. And I read lots of guys, the bull market's over. Your fear index on crypto, man, I got told I was reckless for having attempted buying at that low. It was interesting and entertaining. Where is the fear and loathing index? Let's just see. No, there it is. So not so long ago, it was greed and extreme greed. The week before that one. Now it's 27 fear. This is time to be bold. This is the time to be bold. The masses are wrong. This is time to be bold. Being reckless, I was told, buying at 48K. Meanwhile, the guys 2 weeks before buying at 62,500 with the bend banana and marginally higher highs, desperately needing a macro hard sell-off. That was reckless. This is not reckless. This is not reckless. This is a macro bull, and this baby ain't over. And that snapback is encouraging. So what's going to come next? What am I predicting? And what does it mean for everything else? Well, let's just get back into that part of the presentation. This is a good rebuttal, by the way, this selling. And by the way, there was also signs of hammering. Let's get the draw tool back on. Come on, draw for me. Hammer, hammer. Whenever you're unsure about direction, go up to your big time frames and look, just do basic candlestick analysis. So much can be achieved. People start watching the 15-minute and the half-hour and the 5-minute charts, and they can't see the woods for the trees. Go back out and stand on the hill. Be a general. That's where the enemy are. That's where I am. I want to hold the highland. I want to make them walk through the mud before they have to fight me. I want them to come uphill. I want to be downhill. We're going to roll some stones at them and greet them with a cloud of arrows. We're going to have some guys on a height on the other hill hitting them from the side. Be the general. Be the general. Get the big picture. Look from the top of the mountain. Clear sign of hammering. And I tweeted this out. I'm going to stick my neck out and say the next move is bullish. This is what you missed if you weren't following the Twitter. And as I say, we get plenty wrong. We're not interested in being a hero. We're interested in making it easier for you to be successful, by the way. So I will show you that tweet. We were sticking our neck out and we were saying it's going to probably, and it was a dangerous thing to say according to many, but it was probably going to be a recovery point. Let's catch the tweet, catch the tweet, catch the tweet, catch the tweet. This is it. Going to stick my head out and say, one day ago, Bitcoin rallies from here to upside a fair bit through the 52,700s and up plus on an upside M15 HVF. Also looking at bigger daily time frame. Clearly support through 48, 49K. This is looking at exactly what I highlighted there. Hammers, hammers, and hammers. In actual fact, you went quite strongly and we went into the rising wedge. The base of the rising wedge started around there. That's when you started basing. You were impulsively up before it. That's what I would often refer to as the base of the wedge. And where did the support come in? You just released all the fluff from all these relative highs. And you crapped the bed. There it was. How you could have been earlier to this and how we were lucky enough to reduce some of our leverage. Did I play a blinder? No, I got things wrong even in doing some things right. And that's how it is. We'll show you how that played out as well. So that was a key element. Remember, follow the Crypto Sniper if you want the updates. Will it always be accurate? No, I'll be 180 degrees wrong sometimes and fairly often. And we don't need to be right that often because all our reward trades are high reward to very low risk. High reward to very low risk. So here's another way you can use fibs. We're doing a Fibbo learning curve for you here. So the key element that you need to understand is, again, understanding the macro HVF. You can't really do that, guys, if you don't understand the HVF method. I'm sorry. What I'm going to show you now is based on the fact that I know HVF method. You know what to do if you want to learn it. You've got to go to the link below, click book a call and make a decision. That's up to you. Don't do it if you don't want to. It's fine. I'm giving away for free right here, right now. But you're not going to carry it. It's not going to stick. It's not meaningful to you. You haven't invested in it. It's simple. So this was our second interim, the 19s over here. And then our targets would just run through, little wind up to run through it. This was the first meaningful pullback after the first cup gold nugget target run. So the last low in that falling wedge, and we called that falling wedge, by the way, all this history is in this crypto. We don't delete any YouTubes, including the ones we are 180 degree wrong. Go and see them all. They're all wrong. They're still there. They're all right. They're still there. If they're half right, they're still there. If they're half wrong, they're still there. So that is your last low before you went on this up move that rounded out. So bear with me a little bit. This is going to light up with all the other annotations, but I'm going to put a fib on here. And how can you use it? Well, I use it knowing what we know. Here was the top right there. And that's the one I've now put on. So I thought it would all flash back. Let's just take that off. So this is going to be a little difficult to read because there's so many annotations on here. I've got a lot of values. This is a working man's chart. I make no apologies about it. So what have I done? I've grabbed the all-time high. I'm going to see if I can just get those labels to disappear because they block a whole bunch of stuff. Take a few of them off. Comments below. Tell me if your charts look anything like this. If not, you're not trying hard enough to make a mess. You had a tidy room when you were a boy, I bet. Okay, so that was our all-time high right there. Let me just move that on there. I can tell you the value. It was 64,895. This didn't exactly shrink on it. 64,895. What have I done? I've run a downward fib trajectory, downward, to that last low before you commenced the move up. That was your falling wedge final gift. We were in that and we bought the break of that falling wedge to the upside. You may recall it. There was Elon Muskiness, Husky Musky, with his doggy coin and his BTC tweet pumps. Do you remember that? Well, not that long ago. And he gave it a pump there, well, the first one fizzled, and he gave it a second pump there. That was elongated muskiness, jiving the cryptos. Anyway, so we've taken that low over there to that high, and we're projecting downwards. The amazing thing right here is how a lot of things open up. That pullback was to the 61.8. And that right there was to the 50%. So from your first meaningful correction post-target at the final low before you began the upward move to the very high that we're at, that we're now having this pullback, you stopped on your 50% fib right there, the low. and that previous was at the 61.8. Really kind of interesting. And that's a little bit of fib history you've now been given, courtesy of the Crypto Sniper. Give us all a share if you enjoyed your Fibbo lesson. So what's coming next? I'm going to once again take the rest of the hard-working chart bits out. Well, here's my guess. And it is only a guess, but it's a probability-based guess on the experience of following price behavior that can be wrong and will be wrong on many occasions, but slightly better odds than a layman. And that is that we're going to walk our way up for some form of a relative high too, and it will be utilizing some of our key levers. Remember the 59,950, the 57K. We've shown you the 54K and the 55.5 recently because we kind of been on the lower side again, and that will calm down. So in short, we're going to have a quiet period of range trading with highs and lows. This is exactly what we want. We want to set up a continuation structure again. Look, it could be a falling wedge, it could be a rising wedge, but I think it's going to be symmetrical. Symmetrical to start. It might later, once everybody gets bold again and is stuffed full of leverage, it might turn into an ascending structure, depending on human nature, where that's quite low and that's quite steep. People get the script and they'll start buying the dips a little early. Who knows? I can't tell you. I hope for perfect symmetry. So maybe there'll be a decent reason why it'll sell off a second time when it gets in and around the 59s. Clearly the 60K has been what they call in Everest the zero line, you know, the oxygen line. If you go down, you're on your own. The other guy's as exhausted as you. He's just trying to get to the top and back. And it's called the death zone. So it's been for now a little bit of a death zone, the 60K. Not quite there, couldn't hang on, touched but couldn't go above, couldn't hang on. That's your death zone. We will overcome it and we will go beyond it, and we'll come back to those Fibonacci answers at the end. What about the alts, you say? What about the alts, you say? Well, Ethereum has been showing relative strength. It has been showing relative strength. And we've been keeping you at it and keeping you reminded of it. Let's go to FBTC. Remember, we said the big value was that 4% when we were expecting the down mark. We said, and ETH hit 4%. Where's it today? 4.6%. Ethereum right now is overperforming Bitcoin. More importantly, it has broken the big macro structured setup. And this time I think it means business. Remember the gas thing came and spoilt it all? When you broke over here, complex shouldering. We've done an amazing bit of theory on advanced head and shoulders. Simple, complex, hybrid, nestled, and monarch, head and shoulders. Our theory. You can't get it anywhere else. And how you play them, how you can draw them, how you can understand them. Anyway, key break. Right there, back at the 4. And that's when Bitcoin got a little bit wobbly again and gave us our first sell-off. But the important thing is, Ethereum actually did rather well. In spite of Bitcoin coming off, it has performed better. We will show you on a shorter time period. So remember, this target will take you through on most platform draws. This is Huobi. I'm running out of exchanges to do draws, but I've got various things I don't want to lose on different exchanges. On most of the other exchanges, we're at 6.6%. That is, one Ethereum is 6.6% of a Bitcoin. Remember, I've done the Chinese mathematics for you a couple of times. If Bitcoin's at around 55 grand, times it by 6.6%, and that's your potential for Ethereum. 6.6 times 55 is quite a hard number. If Bitcoin gets back up to 60, let's say again, and that RH2, that secondary high, that will be lower than the previous all-time high, but part of a continuation pattern to later wind up and bring it to the more mid-summer rather than early summer to the upside. you will get, if that's 60 grand, 6.6 times 60 grand, you'll be knocking on the door of $4,000 Ethereum. And other alts in that less large already can do in percentage terms even more, even more. Let's drop down into those shorter time frames. See the falling wedge? Yep, it popped as well. So we called this live here on this channel and said Bitcoin to go to 4%. You're buying it at 3.5%. Today it's 4.6. Are you going to keep waiting until it's 6.7 and possible overperformance to that? Over here, you got a structure. Guess what? Right at the 4%, you needed to push past it. Overperformed, falling wedge, bounces out the falling wedge, may set up out of this, another triangular setup, and go again. This is showing overperformance. My collateral on most of my accounts is actually ETH. I'm taking the extra volatility risk, but I'm preferring to hold the collateral in ETH. And that's why your account can rebound better. A large part of your P&L is also your collateral. What are you holding it in when you're margin trading? How much of it? I've actually not got a great deal of Bitcoin. Got a ton of Ethereum and it's bounced back. It helps your account equity come back up if you're basing it in the right. And you can get very close to the same leverage levels on Ethereum as you can with Bitcoin. So you should be based there. Anyone getting any ideas on how to improve their performance here? For free, from the sniper. Hit that like if you're getting some ideas. 580 of you. Is there one man in the room that I'm serving? Please tell me. Hit that like button if you're feeling served. Couple of things for you. Yep. Yeah, can't imagine me queuing at the CV test center. Not me. Not me at all. Indeed, 50% likes would be awesome. We're not far off. And shares, even bigger currency for us. We thank you. Okay, so that's the opening salvo of ETH versus Bitcoin. Why you could actually stack your collateral more in Ethereum right now. Listen, remember, it's a smaller token. If Bitcoin properly craps the bed, it can go down as well, and even a higher percentage down. With what's just happened now, I think it's the safest time actually to be in Ethereum collateral, because I think it's going to overperform and Bitcoin is walking its way out. What about that walkout that we were talking about? Let's go back there. What about those warnings on the shorter time frame that I was talking about up top here? So let's do that and show you them. In fact, it was better done on that platform. So I mentioned when you're up top here at the 64 odd, we actually got a warning that all was not well. The last little HVF. So big moves die in smaller patterns. You get macro patterns. Remember, 2.5 year macro pattern. It's my entire basis for macro bulldom that will actually, in my opinion, see bullishness extend beyond December of this year. I think it's a higher chance than any of the previous years to do that because of institutional adoption, the normal curve. We're at the parabolic phase now. Uncle Klaus and the rest of the gang are going to be doing drills this July, even with the Russians that they're supposed to all hate, on, wait for it, cyber hacking. Given COVID and everyone being online and banks, our biggest risk is to the financial system. Oh, I wonder what's going to happen next. They're so good at predicting stuff. They're so good at predicting. They always just happen to do a little drill before something happens. Anyway, so the adoption curve is spiking. So that is a parabolic phase. Later, it rounds out. There's more people in than there's new people that need to get in. Right now, this is your fastest acceleration. That's your top end speed. That's your fastest acceleration. At this point, there's less people coming in than are already in. But that still means the ball is getting bigger. It's just, it has an acceleration where it's going faster, and then that acceleration reduces. So I suspect that will come into play. I've mentioned it to you before. But what happened here? So you have smaller patterns squeezing into highs, which throw down a funnel. Whoops, you came down, you made that target. Straight after you made that target, you started grinding, which is exactly what happens. Loss of momentum. You came back down, you bounced on the funnel, you got a bit of a rally, but not very far. You bounced again, got a little bit of a rally. You came back in and bounced deeper into the funnel, got a little bit of a rally, and then you spill a thriller. The latest you should have been closed is there. Plus, you had this grind line all the way through. Note how the grind line across the lows and the funnel break all occur at exactly the same time. You see that? The snipes, the confluence of events. Grind line, funnel, break, alert, red alarm. Are you out? I was dumping my alts like this. You know, the frenetic cat. I was late. I didn't play it good. I should have been out earlier. I became a bit concerned after the first funnel tip. I didn't add anymore. The second, I was like a little bit of light emptying, but didn't do enough. Thought, well, let's give it more time. Maybe it'll get better. You know, hopey, feary, FOMO-y, want to hold on thing. And then as it started running, it was like the cat that everybody shares the meme. It was like this, dump, 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 dump. So I didn't play it brilliantly because some of it got out probably as low as down there. But you know what? It's a whole bunch better than there. It's a whole bunch better than there. You don't have to be the cocaine cat. I'm going to call it the cocaine cat because he's like, man, I'm searching kitty porn, man. Yeah, find me a woman. That's hysterical. But anyway, you've got to have seen it. I've seen it playing in my mind, and some of you guys must be going, what is he talking about? But anyway, so there they go. Down, down, down. You don't want to be selling into that. And the problem is if you don't have method and you don't have levels that cannot be broken, you end up selling into the spiller. And the spiller is execution nightmare because you're now in the stampede with all the other sheep stampeding across the railway line. And the train keeps coming and you're still stampeding and they're all scurrying across and they're all scurrying across. And if it's not your lucky day, boy, you're one of the 6 that just get plowed. And you become lamb Karoo society under the wheels sooner than you expected. But anyway, so don't be panic selling. Anytime you're in a situation of panic selling, you know that you've been given 3 messages to sell that you ignored. And if you don't have those 3 messages, it's because you lack method, you don't have a technical analysis based approach, and you do not understand. You're following the herd. You are a danger to yourself. You will be selling the lows. It's better almost to go and put all your money in Ethereum and Bitcoin, put a 50% leverage on Binance, lock up the account and come back in 3 years. You'll end up doing better. It probably won't be stopped out if you only put 50% leverage and you choose a decent time to do it, like now, possibly. But, you know, people will be people and you will get caught in that situation. Recognize you're doing a mistake. And I was part caught in that situation, at least early on. I was helping push that carriage over the cliff, actually. I was part of that. But anyway, so you don't want to be in that situation. You had warning, you had warning, you had warning, you had weak rally, no real meaningful. This was on a skid. This was on a goddamn skid. Type 3, falling wedge. Damn it. Get out. Get out! What are you still doing there? Get back in! Why are you still short? You're behind the curve, man. That's the thing. You've got to be quick and nimble if you want to do leverage trading in this game, guys. And you've got to be paying attention. And you need to get some rest sometimes. Sometimes you just need to be out of the market. Hence why we say blue pot. The bulk of your wealth should be in blue pot, a little bit in orange pot, and then you steal from orange occasionally when you have high certainty options in red and you tax the bulk of any profits back down. That's how you trade it. Anyway, somebody wants Solano, so there's a lot going on. Ada Smart Chain, Charlie is on uni. Yes, so Ada's got some good news coming in time. Yes, it was a little bit of a disappointment for the alt run. You might get it second time around. Post-Bitcoin spill, now reinflation might set us up. Others that might do that, Ray, Binance. Okay, I will show you Binance. I'm not going to give you everything we're doing in the community because that's also for them. But we'll give you a clue because we love you and we want to give you a chance to afford your way in. People say, oh, it costs so much. I can't afford to get in. This is an objection. Costs too much. I can't afford to get in. You're learning. You're changing the world. You can only learn HVF method from the man who created HVF method. It's the best thing out there. You can be a better implementer than me. And you can learn it while you trade. It takes the same amount of time as you're taking to trade right now, to just trade differently. And you'll have other people that are helping you along the way in a community of the willing. Capable people. We have a lot of awesome people, highly qualified people. It kind of, I'm afraid to say, a ticket price keeps out the riffraff. We just get quality people that have already manifested in many ways. And I'm delighted and very grateful to have them, because every day chatting and doing something on media, saying what doing my analysis and showing my thinking helps clear my own head. This is amazing. The left hand watches the right hand. Teach what you seek to learn. Help other people in help yourself in doing so. You either see the virtuous circle that exists in that, or you do not. That's why we have an unmonetized channel. We don't care about adverts or anything else. It all serves. It all serves. Okay, so where were we going to go next? Binance. I was going to give you Binance as one option, but it's not necessarily ready yet. So here's something that you should consider. We gave you Binance before. Yes? Say aye, skipper. I saw it. You did. It did go. That was one that worked. Yep. Quite a few worked in this alt run, as we pointed out before. Not to brag, because we'll only get humbled anyway. Plenty of things could not have worked. A few didn't work. E-Gold, Elron, didn't work for me. Ray didn't work for me. Well, one or two others that were late, and I ate a red on. So it's all good, and net we gained. So here's a little bit of Binance. We like that, and we see 718. Now you know. What you want to do? Maybe accumulate. So what happened is Binance showed relative strength the whole time. Bitcoin was making new lows. That was Bitcoin's first plunge. How do you see? You split your screen and you put it under. You can also have a look at the Binance BTC chart, by the way. Let's put Bitcoin under there. Compare. Binance only, whoops. Let's go back. Sorry, I put Bitcoin at the top. That wasn't smart. Okay, let's put Binance at the bottom. Maybe it needs, Bitcoin only comes when Binance is underneath. It must be an interesting relationship they have. Bitcoin, yep, is on the top. Binance, okay, so 4 hourly, yeah. So here we're going, we're showing you what's happened. 26, 23, 21. So I've got the days kind of under each other now. That's the idea. So this is what happened on Bitcoin. I'm going to just switch the eye off so that we can have two naked charts. Be naked, man. That's what Binance did when Bitcoin was doing that. Final low for Binance. First plunge low for Bitcoin. A very strong secondary high here for Binance. An inverted HVF for Bitcoin. A spiller for Bitcoin. A low there, but higher than the previous low. So that's what Binance has been doing, while Bitcoin has been selling off. That's called relative strength. Failing to make new lows, whilst others make new lows, including its God market. This is the strong farm boy son that is not getting sick even when daddy gets sick. And that's Binance. So one for you to keep an eye on, and you can trade it. Let's have a look at some of your comments. Was that opening salvo of use for you? Did you learn about Fibos? I still owe you the Fibo numbers. We will give it to you before we leave today. What will be the next key Fibo events? That will be probably run through. Remember, it's not going to give you the high. Probably run through, but you don't want to stay in too much long after, for which you may get another sell down. They're all on the 61.8. That's the clue, and I'll be giving them to you. Nobody big buy orders were accumulated for PPT, says somebody, mellow fellow. Bonfire, hottest coin right now. Someone's pumping a coin there. Of course, money coming out of stocks. They just announced CoinDesk. I think he means Coinbase, or maybe he does mean CoinDesk. It's something else. BTC still king, but there's other coins that are only on a rise and can rise. So invest is the key. Cardano, Stone, there seems to be a cold war. ETH on a daily is a rising wedge. Well, it is a rising wedge in the same way that Binance is a symmetrical triangle stroke HVF. but it's a rising wedge because Bitcoin has been pulling it down with each leg. If Bitcoin stops pulling it down, it might melt up the top. Remember, you can melt out the top. That being said, if there's a lot of hungry buyers buying along the bottom, they're either going to exhaust or they're an early part of a mega tsunami that'll push it through the roof. So they will exhaust and so there will be a pivotal event where it will show itself, and it'll either moon spike out of the top of the wedge or actually have a bit of a relieving stab to the downside. Yes, BNB has actually relatively underperformed, and I think that might have something to do with ETH. I don't know if there's an adversarial relationship with Ethereum and the other potential chain tokens that are deemed as alternatives like Binance, etc. So it has. That's why I think you might be able to, you don't chase in at markets, guys. You can maybe acquire it. It might soften a little more lower down. So it's more about its medium-term outlook, potentially 718. We've given you a number, something that's 718 on something that is currently in the fives, low fives. So, you know, it's better than a kick in the backside. But that doesn't mean you chase in right away. I didn't see Sailor versus Glustra, the gold. I did see it advertised, but I'll have a watch. A lot of people were claiming Sailor victory. I think it's either or, it's both. I don't think it's either or in these games. I know Sailor refers to gold as a wooden ship versus aluminium or steel ones. And it's an interesting analogy, but the difference is wood has its uses that steel cannot fulfill. And the ship where you just have to float is only one thing. Gold is off-grid money. So yeah, it's I think you need both. Troy, so let's have a look at Solano. Is that being asked for?
Troy and Kusama.
Kusama and Solano and Troy. Troy I don't know at all. Been hearing good things for Sol's side for a bit. Also didn't wear the Bitcoin problems at all. It's continued up. I would find it hard to buy in here now, though. It was the best thing to have held. You've got to recognize what was great position to have had for the last 2 weeks or 10 days versus what will necessarily be the best position to have going forward. We've seen Theta at all-time highs, only to see it come back. We've seen BTT, BitTorrent at all-time highs, only to see substantial pullbacks. We've seen lots of tokens. I can't feel myself buying in there just because of, I mean, if you're in it before all of this, well done, and you've done brilliantly. Congratulations. And it's lots of positive fundamental things are seeping through. All my many whisperers that whisper in my ear and tell me about great projects, hearing good potential things for it, but I think it's been reflected in the price. We've just had a major Bitcoin sell-off, and during this period, this thing's just shrugged it off. That doesn't mean that stays that way into a rising wedge. Would I buy it? It could moon spike out of that, and then of course you look stupid, and it can then sell off hard out of that, and then you look smart. I just don't want to bet on that because I don't have a measure for knowing which one will come in. If you're already in it, you're a champion. Well done. The other one was Troy, and also Troy, I don't even think I have in a list. What was the third one? Troy, Kusama. Yes, Kusama. There's regular requests for Kusama, which goes a little bit hand in hand, doesn't it? I'm being told. Is that it? No. What are you, Kusama? I've got you in here somewhere. Yeah, that was it. So again, another alt story of some success. Macro, it's just great. We've only got March of last year, but that's what it's done. That's what it's done. So really nice. Started real low. It's at 374. Blimey. And on something that started at 1.1. I wouldn't want to ride a bear market on that. You could have 99.9% go. Not because it's a bad project, just because it's wow, it's done a lot. It has done a lot. Bitcoin turning up, it's turning up. It would be nice to see it do what I'm suggesting Bitcoin might do. So this is quite a big time frame, it's daily. On coins that I don't look at often, I like to start with getting the big view. It would be great for it to do that for us. And then invite us in. That's how it invites you in. Give me a squeeze, a tight stop, a quick entry that the market can take me in. I could even be out paddling, surfing, doing whatever, and a macro target. That's what I want. Invite me in. I can't jump in anywhere here. This is an escalator and it's moving. And wherever I get might be the point that it turns around. So very nice chart broadly. Well done if you're in it from the beginning. Good job. Or anywhere at some point. Had a moderately sized correction there at $20, now 372. So it's a huge, unbelievable move. So there is money chasing in. I don't know what volume it trades in though, because it, let's have a look. I prefer to keep within the top 25, even with the spec coins. Solano, Theta, Stellar, yeah, it's not in the top 25. Algorand, yeah, Kusama, not Solano, 45. Got a 2 billion market cap. Impressive. But you might just have to watch liquidity if you've got some size. Charlie won't be as good as Link, but it's now. So, yep, we've had a look at Link. We can show you Link. Link sold off pretty hard with the sell-off. So we'll go past Link.
Can you take a look at Troy? Or is it
Oh, yeah. Troy, is it a small one? It must be. Is it, what number is it on the thing? Because it might, if it's been around for 10 days and there's not much history, and it's super small, it's not really a great thing to do. Technical analysis is more meaningful with data and multiple time frames. I'll still have a little look because we said we would. This is starting to slow a little bit, but it also depends what happens. We had a setup there, never quite made target, but it hasn't invalidated yet. It can still. Getting a bit of support now. That's Link. Okay, let's do that, Troy, for that.
Troy looks really small. I think rank 264.
Yeah, you see, this is, I mean, you're welcome. Guys always want to have a penny stock hero. You'll see the Kusamas of this world, and you say, if I bought that project and it went up 300 times, you would have sold it 25 times, everything. The minute it went up 10x, 5x, you'd be 100% out. And then you'd be FOMOing back in it once it had done 100x, and you'll be eating the 60% pullback. That's retail trading without method, guys. I'm sorry to say it. That's why you click the link below and you book a call, because your natural tendencies are very, very strong, even amongst very intelligent people. I'm not standing here and calling anyone stupid. Let me tell you, my tendencies have to be overridden continually by imposing the discipline of method. And I still will go, I'll give it a bit more time, always regret it, always get out, always end up paying more. End of story. Rarely. And sometimes I don't want to take off at the target. It'll go a little bit further. I'm having such fun seeing a spinning green P&L. Pop, goes a little bit further. You feel like a king. You're so smart. Sudden smackdown. Boom, 25% down. Boom, you end up selling it with only half the profit you would have made if you'd closed on target. You saw that with those fib levels. Of course, 36 feels stupid when it goes up to 42. It don't feel so stupid when you can buy back at 29. Of course, 54 feels stupid when it goes to 58. It don't feel so stupid when you're buying back at 41. No, that's how it works in reality. Sometimes you just got to leave it and say, that's it. I'll do good and I'll pick up the lows and I'll be patient. Patience is one of the hardest things, especially when something keeps going. You go, oh, I'll just go back in again. It's going up higher, clearly. And then you wear. You don't get the whole up move, but you take the whole elevator on the down move. Bang! That's it. That's what retail traders do. Every single one of you. Own that fact. I know it. I did it. I still do it sometimes when I'm not listening to my own method. And I genuinely try to stamp it out. And it's so nice to have a template to refer to. What should I do? What does the method say I should do with this decision right now? Because 9 times out of 10, it's the best thing for you. And you just have to show patience. Okay, that's it. So that's Troy. We didn't even analyze it in the end. It's been on literally since the beginning of the year, just back end of last year. That's weekly, 10 days. Big hammer sell. No idea about the project. I don't know what to say, really. It came down hard here with the Bitcoin. It hasn't shown any special strength, and it's rallied somewhat on that wick and where it is now. Not more so than even an Ethereum, which is far more liquid, or anything else. Could it more easily go from a smaller number to a much higher number? Potentially, but that's going to come down to invite me in, and it's not yet inviting me in. It's not giving me what I want from a trade point of view. I don't know it fundamentally, so I won't be playing. And it's got less liquidity than any of the others. It's just 200 cap. I'm quite happy for the easy money to be taken in the 200 caps, and only the real winners to be brought into that top 25 and then trade from there. Because you trade with mild leverage on something that's going to make 80%. You don't have to do 10x, and you're not dealing in something that has nothing backing it. Okay, good. Guys, book the link, grab a call. There's no reason not to. You're trading, you're watching YouTube, you have the time. You're just going to do it differently. You're not needing extra time. You're just going to do it differently and better, and you're going to accelerate, quantum leap your understanding. If you've ever ridden fast down a bicycle track and got timed, and suddenly you followed a pro rider and you took every bit of his line instead, and then you got to the bottom and you were suddenly 2.5 seconds quicker while being the same guy. Just because you took the outside line, which was longer, but held on to more of your speed. Boom, you followed him. You did everything he did, and you didn't even do it perfectly. Remember, you don't have to execute perfectly. You just have to be better than what you once were. That's it. And then suddenly you're making more money and you're doing better quality decisions, and you feel the difference inside you, and you feel a little bit of that confidence, and you start to think the market loves you. They don't hate you. That's the beginning of method. That is method. Install method above everything else, and you'll do great. Oh, the Fibonacci's for Bitcoin. I promised you that. I'm going to finish on that. You've been waiting patiently. There's 609 of you. Let's go one more time to the God market that is Bitcoin and throw on the big fib. So we gave you the 36 and the 54 last time. What are the numbers this time? I think it's this one. It'll be a busy ass chart. Here they come. Are you ready to write this down? Write it down. If something's worth writing down, let's get it. This is a log scale chart, by the way, so it will expand. I'm going to give you the numbers. You don't even need to see the Bitcoin chart for it. So you saw that 36 was significant. You saw that 54. The next level will be 72, 171. 72, 171. Probably still be part of summer. Might be the end of summer, might be midsummer. 72,000. The one after that, 89,888. You're literally banging on the door of 90. And the one you all want, I know you all want. And you're going to forget I gave you these numbers, because none of you listening or watching remember that I gave you 36 and 54. Because that YouTube is 15 YouTubes ago when we were at 27K and asking what are the next significant levels coming. So I'm giving them to you. Write them down. 72,000. 89,888. It's basically 90. 90,000. 108,000. 107,500. So 108. Remember I told you this. That's how you're going to break 100. You're going to keep going and you're going to run through 108. That's right. And it'll probably go 111. And after you sold at 108, you see it still going up. You're going to jump back in at 110 and a half. And it'll go 111 and then it'll chuck down 25 grand. That's what's going to happen. I'm here to tell you that because I want you to be better. If I warn you of all the places you go wrong, there's a chance you might not do it, even if you're not in my community. I don't want you to die. But those levels, one more time, 72,000 on any wind up, next coming out. By the way, on that HVF, how far did we drop? We dropped from 64 down to 47. 64 down to 47. Let's take all those lines off again. 62 down to 47. If we were to break from around 59,950, let's say quite a high ascending one, I think there's a chance that happens. Add 18 grand onto 59,950. It's kind of 60. It's kind of 78 grand. You could see it doing around 78. So that's 72. That 72 number that I just gave you, you could even go 6 grand beyond it. If you have an HVF, you'll hold on for a reason a little further. But then you'll get out for real, because then you'll have a pullback. And then the next time it goes up, it'll be 90. And the one after that, 108. 72, 90, 108. You heard it here first. And we're not the channel that throws out big numbers. We've waited till the technicals have justified giving you numbers like this. We gave you 36 when it was 27. We gave you 54 when it's 27. We're now giving you 72, 90, 108. And with that, write it down. Come back and tell us if we were there or thereabouts. Remember, it'll go a couple of grand through it, but then it'll shed 20, 25. Higher up, it could shed 30, 35 grand. You don't have to take the elevator down. Stay on the escalator. Remember to take some off. Okay, thanks for being with us. We appreciate it. This is an altcoin opportunity if Bitcoin continues its rally. That is the key theme. Go and select your very best altcoins. We gave you one. There's others being discussed in our community that we may or may not be in. Remember, we talk through our pockets. We are traders ourselves. We have interests. This is purely an opinion, an education channel, and a sharing channel. It is not financial advice. Catch you next time. Thank you for watching. Shares and likes always appreciated. Bye. Until next time.